Cryptocurrency. The word probably doesn't give you the same fuzzy and warm feelings as IRA and infinite banking. But if our economy has proven one thing, it's that Bitcoin and other cryptocurrencies can no longer be ignored. Like it or not, they're here to stay, which means it's time to lean in and see what it's all about. In this clip, you meet Jeff Nabers, a former mortgage broker who began investing in Bitcoin when it was under $100. Since then, he's gone on to launch the industry's first ever crypto hedge fund. Not only is he an RIA, but he's also the guy CEOs and Wall Street execs call when they have questions about crypto. Now he's sharing his knowledge by helping advisors give their clients a new investment opportunity. Regardless of whether or not you invest in Bitcoin yourself, it's imperative that you understand the basics of what's happening so that you can give your clients sound advice. Want to learn more? Stay tuned.
If you haven't, been thinking, wondering, criticizing, critiquing, at the back of your head even the rise of Bitcoin or cryptocurrencies, then you must be living under a rock, because this is the time that Bitcoin is to be discussed and needs to be paid attention to in our industry. And I, for one, am shocked at the lack of conversation that goes on in this space of cryptocurrencies, when I got to tell you, quite honestly, I wish I had learned and did my own due diligence earlier on. But you know what? I'm so happy I did, because at the turn of the pandemic, I started to go on a full-on PhD mode research zone that Jeremiah loves to do when I'm trying to learn something new, and just put myself into student mode. And through that journey, and what I've seen happen just since the beginning of the pandemic has been mind-blowing. But here's the thing, it's not even really getting started yet. So the gentleman who helped me get clarity was somebody that ended up being introduced to me. I had known about him for a couple years. In fact, I've worked with him and his wife, and him and his wife, and Anais, my wife, and myself have become really good friends. And through this process, I have had built an incredible relationship, but also an incredible amount of respect for what Jeff has done with his company. And just every time I peel another layer back of Jeff's story, I kept telling myself, I said last month, I said, Jeff, I just got to get you on a power hour, and we got to tell the world what we're seeing here, because we can't keep this to ourselves. So with that said, friends, I want to welcome the CEO of Nabers Wealth, Jeff Nabers. Come on up, my friend. And one thing that you guys must have known in the emails, what was so cool, Jeff, is talking about your story of the big short, how you big shorted the real estate market. We're not here to talk about real estate tonight, but I thought, for somebody to have gone from 100 properties to selling them all and just was living the life, and then you shorted it right before you lost everything. And basically, how old are you? Like 35 or something?
Yeah, 39.
39. Like you basically went into retirement in 2008, 2009?
Right. Yeah, right during that financial crisis. Yeah.
Yeah. So, Jeff went into retirement, is like, yeah, I'm good now. But then something pulled him back in. And so that's what I want to jump into, Jeff. Do you want to just tell us a little bit about, how you started getting into crypto after, and just kind of studying and looking at that market?
Yeah, absolutely. So it does tie into the 2008. I say it was the little short for me, because I wasn't like squeezing it for everything it could. I was just managing my own little wealth. But a lot of the stuff from the movie definitely rings true to my experience. But coming out of that, I was all in real estate. I had built a mortgage business. I'd taken the money from that, and I had been collecting doors, as they say in real estate. And when I sold all of my real estate, by default, I was all in on cash. And I was sitting there going, cash is king. I'd heard that. So we all hear things and we repeat them. I was saying that. And then all of a sudden, I started doing my research to look for kind of the next investment trend. And I got into gold. And the reason I got into gold is because I started learning about the history of money. And the more I learned about money, the more I kind of started to zoom out, and I realized there's a flaw with the dollar. You know, we all charge up the dollar with the value that we put into it with our trade in the economy. And so that the dollar represents the value that we put into it, but it's leaking a lot of value out. And I started reading into it, and what I realized is the dollar is actually, as it is today, a radical experiment that's likely to fail, that if you just do a little bit of economic research, you learn that there's 100% failure rate with this type of system. It's called a fiat money system. The first one was over 1,000 years ago in China with a currency called the Zhaoi or something like that. And every time they've tried it, it's failed. And yet they tried it again in the United States starting in 1971. Here we are. We kind of put our heads down. We work for it. We get it. We spend it. We don't really think about what is it and what's the overall trend with the dollar. And I started realizing, you know, one day we could wake up and the dollar could be no more. And I thought that was crazy at first, but through reading books, I was realizing that you could see something, everyone could think you're crazy, you could get made fun of, and you can turn out to be right. And you can make a lot of money. You can build generational wealth by being right when everyone else is wrong. And so I started building up a gold position. Then I saw Bitcoin launch and I just said, yeah, that'll never work. You know, government will crush it. How are we going to have a currency? There's no, you know, who created it? Some mystery character. I had all of the objections and limiting beliefs and dismissals of Bitcoin. So I dismissed Bitcoin for several years. But in 2013, there were some problems in the gold market, and it started to really affect my gold position and my outlook on my investment thesis. And it caused me to go back and look at Bitcoin. And when I went back and looked at Bitcoin, I realized something special is going on here, and it might not go away. And if it doesn't go away, it's going to become the biggest economic trend in our lives. And I think we're now in the next chapter of that, and it's shaping up to be.
Absolutely. Now, you know, I should let you guys know I didn't really give Jeff, you know, the full-on bio, just because he's probably one of the smartest guys I know, and every time I talk to him, I come back enlightened. But you should also know that he's also sits on the board of the BFI Capital Group as an advisor on crypto assets. He has his own fund that he manages, which we're not really get into today. But just so you know, like he's what I appreciate about how you approach things, you know, it's funny. I always thought you were an economist, but then I just realized you were telling me, hey, I just read tons of books on economy, and the way that you look at this. So that's why I'm really glad Tom's here. Tom is, you know, one of my other favorite friends who's an economist, and the way that you are looking at this is a way that we all need to take a step back as advisors and look at the big picture. So what has led you to, so we kind of talked about what got you to the focus right now, and over the past few months we've seen Bitcoin was a massive rallies that hit 40,000, and now it's come back down a little bit, and as a result, you know, we have and just right before that we had all these major institutions starting to invest in Bitcoin. Should we expect a massive correction, and what does this mean in the context of the legitimacy or the acceptance or the time to lean into Bitcoin?
Sure. So yeah, I can show you on my screen. So I think the first thing that we need to do to be able to set up like a proper answer to that really good question is if we look at this chart here, if you look up Bitcoin, and by the way, if you're into looking at charts, this is TradingView, in case you're wondering how I'm setting this view up, tradingview.com. So this is Bitcoin. And the first thing that I'm doing is I'm making sure that we look it up, and we're pulling the data from Bitstamp. Bitstamp, we want that because they're one of the oldest exchanges, so the data goes far back. Okay, so immediately, one word, what comes to mind when you see this chart? Rhymes with rubble.
Bubble.
I mean, it looks like a bubble. Like, okay, here we are. So if you kind of zoom out a little, the data starts all the way back here in 2012. It's not doing anything, and then it explodes up. It crashes almost all the way back down, explodes up, crashes down, and then now it's exploding up, and it really just looks like a bubble. This is actually a problem with the charting view, because Bitcoin is doing something so amazing that you can't use a regular chart to even get a look at what it's doing, because in this scenario, the percentage moves at different points in time are plotted incorrectly. This is a linear chart. So this button right here, where you put it into log chart, this is the same exact data. How different does that look?
Mm-hmm.
I mean, it looks like, how could that even be the same asset? This is a bubble, and this one has volatility, but it's steadily climbing just up and to the right. So the first thing I would say is, if we want to make sense of the price movements, we need to zoom out to the whole picture, all the way back to 2011 and forward. Second thing, we need to look at the log chart, logarithmic plotting. Then what we see is there is a lot of volatility. Like if we want to measure some things, like if we want to zoom into here, we can measure, these are weekly candles. We can measure like from the new high that was achieved just a couple of weeks ago down to the correction. It's about a 30% correction. This is why it's so important, though, to look at the whole picture, because that little correction is nothing. Bitcoin is volatile, and if you want to know how volatile it can be, you can look at this 2013 to 2015, lost 85%. Up here, lost 82%. So I would say the number one thing that matters when seeing the forest and the trees is to understand that it doesn't really matter how many points you put on the board in any quarter or inning or whatever. It's the score at the end of the game. So we want to think long term. And yeah, you can lose a lot of points on the board. You can have an 80% drawdown. But just to put the numbers into perspective, this is an asset class that has grown by over 30 million%. So the only way that anyone has figured out how to lose money with Bitcoin in the last decade or so is by holding it for less than a multi-year time period, or by not properly securing it and losing it. Anyone who handles the security and has a long-term time horizon is in the green right now, and in the green to the tune of, in some cases turning thousands into over $100 million. So this little pullback is just part of its fluctuations. And if any asset class that we invest in were as small as Bitcoin, it would have as much, if not more, volatility. This is a 0. I haven't looked at it in a few weeks. It changes a lot. It's like a $0.8 trillion asset class, not even $1 trillion. Stocks are approaching maybe 100 trillion globally. Real estate's 250 trillion. This is a $0.8 trillion asset class. So anytime somebody puts millions of dollars in or out of it, it moves the market, and there's traders. So number one rule in my view, look at the log chart and think long term.
Yeah, great insight. It's funny, as I've watched Bitcoin from the sidelines as a spectator, I'm willing to bet that a lot of, our listeners and our audience here, there was countless startups, a lot of ICO or initial coin offerings, new concepts popping up after the rally, and a whole bunch of, destruction and blood in the streets when it came with all these other crypto assets. And people were hacking Twitter accounts so that they could promote Bitcoin. Like, we all remember those kind of stories. They're still a little bit fuzzy. Did the dry spell after that help to purge like the bad actors, getting them out, and then leaving a space for more sophisticated investors? Or do you think that the public mentality is still the same, like, that Bitcoin thing is never going to last?
It's a mix. So there was definitely a lot of purging that occurred. But let's remember, we've been through technological innovation before. We really get used to the way things have been very recently, right? If we go back to the 90s, like, we couldn't be having this webinar. You can't grab an Uber. You can't even watch a video online. Just using email is like kind of where things were at. But back in the 90s, you have to remember, when the internet came about, it was a mess, and it was basically associated with scams. And there was a period of time where if you put your credit card into the internet, it could only be to get scammed or for pornography. So if you're getting your credit card out and you're on a computer, stop what you're doing. That's crazy. Don't do it. Right? And the internet had not yet matured. It needed the iterations. It needed all of the people trying to build things to go through and fail a lot and then build them better and build it up. So in the case of Bitcoin, there's a couple things going on. There are there's like a second wave of not necessarily cryptocurrencies, but crypto assets, where they're trying to build a very sophisticated financial system. But almost none of them are actually competing with Bitcoin. So in a way, there's been some purging, but the number two thing that you want to understand with Bitcoin is it is in the category of digital hard money. Digital, we know what that means. Hard money means that nobody can print more of it. It's very hard to increase the supply. It's basically impossible. Contrast to like the dollar or any fiat currency, it's very easy. Used to be, you just send them out the printing presses. Now it's just a keystroke or an automated program over at the Federal Reserve. So the dollar supply is expanding so much. Over 30% of the dollars in existence today were created just in the last year. So how's that for inflation? So with Bitcoin, it's won the digital hard money category. All the other so-called cryptocurrencies have already lost. So there's something going on there, but Bitcoin won. It's the digital hard money. And there are some interesting bleeding edge technologies in other crypto technologies and tokens and protocols. But those are very new. Those are like where Bitcoin was in 2010 when I dismissed it. Mm-hmm. So that's kind of like the lay of the land, I would say, about thinking about all the other things. And think back to 1999, think back to the tech bubble in 2000. There was Amazon.com and there was Pets.com. And you pretty much couldn't tell the difference. Pets.com declared bankruptcy. Amazon.com has grown enormously. Those were right there, side by side, similar market caps. Similarly with the, beyond Bitcoin, the other cryptocurrency market caps, right there in the top 10, there are straight up scams. And so this is why I think it's so important for advisors to educate themselves, because if this isn't going away, and your clients are trying to educate themselves, and if they just look things up in the middle of the night, they might fall for one of those scams. It's very, very common that they would. Even tens of billions of dollars of market cap were in these scams, such as XRP, which was a securities violation that the SEC is going after now, which I predicted. So we just have to understand 95% of crypto is garbage. But you don't want to flush out the baby with the bathwater, because Bitcoin is the main baby.
I want to take this back to a 101 level. By the way, folks, thank you so much for your comments. If you've got a question or something's unclear, this is the right forum here. This is a safe space, right? Like in my world, there's no such thing as a stupid question. Okay, so if you're a little shy, just speak up, ask. This is the opportunity. That's why I put this forum together, and why Jeff was willing to come on, because of our friendship and our business relationship. He's like, yeah, I'll come on and I'll share whatever I know. Here's a comment here. Van's asking, most of us don't have any idea how to buy it, or cryptocurrencies, or how to securely hold them and where. Can you give some just basic advice around how do I buy Bitcoin, and what's the safest way to do that?
Yeah, so buying Bitcoin is one thing, storing Bitcoin is another thing. And the way that you buy Bitcoin is you do it by opening an account at an exchange. An exchange is basically just there to exchange your dollars for Bitcoin. So you have multiple regulated exchanges that are qualified custodians in the United States, such as Coinbase, Gemini, Anchorage Trust. Most of these are trust companies. And now we're starting to see bank charters being granted. Another one is Kraken. So you have these kind of crypto specialist companies. And that's one way that you can buy Bitcoin. But they're exchanges, so they're really made for trading. So the Bitcoin ends up sitting there in their hands, kind of like just ready to be traded in and out. And I'm not a trader, I'm a long-term holder. So kind of the second step after you buy it is you want to find a good place to store it. And that might be a different company. There's a lot of maturing to happen in this space. My guess is that some of the best places to buy and then store Bitcoin, 5 years from now, might be companies that don't even exist right now, because this is a young space, and we do need more and better options, and everything's maturing. But yeah, Coinbase, Kraken, Gemini. Yeah, Anchorage isn't necessarily retail facing. Like if you're talking about like, getting into it with your own money to dip your toes in a little bit, so you could probably take Anchorage off the list. And I would look at Coinbase, Kraken, and Gemini primarily.
Yeah. Do we want to tell everybody what one of these is?
No, that's probably, we can tell them it's a hardware wallet. You can store some of your own Bitcoin. You can't do that as an advisor because that would be taking custody of your client's assets. But for your own
yourself,
investing, you can have one of those. Yeah. And in my view, it can make sense to have some of your Bitcoin on it, but it's basically like stuffing money under your mattress, and that money could become worth millions of dollars in the future. And if you lose it from under your mattress, nobody can help you. So it is an interesting, it's kind of like a bearer asset. If anybody remembers bearer bonds, that's like whoever holds the asset, it's theirs. There's no registration, there's no identity tied to it. So if you get your Bitcoin on a hardware wallet, you're kind of taking your Bitcoin security into your own hands, and the hardware wallet can help. But then your biggest risk is like yourself making a mistake. So it's not like a perfect solution for your whole Bitcoin position that you might have, but it is a piece that you might have for a small amount.
Yeah. So there's a whole strategy about what you trade, what you keep, cold storage, right? We're not gonna get into that, but it's just really interesting the different ways that you can place them, and there's value in every single one. It's just knowing about portfolio diversification and where you're going to put. Another great question sounds like a basic one, but I think it's at the foundation. It's one of the things that actually I learned from you in one of our early conversations. Brad's asking, what is really the underlying value of Bitcoin?
Sure. So, for any asset that doesn't produce cash flow, so like commodities, for example, the value is always determined by supply and demand. And this is where things get really interesting when you research money. So all of the major currencies in the world right now are fiat money. And they're all expanding in supply because there's an economic currency war that's happening. One country starts to print a lot of money. If another country doesn't print a lot of money and this currency's value goes down, you might think that it's advantage for this stronger currency. No, actually, because when the companies in the stronger currency economy try to export their goods to other countries, it becomes more expensive. And in most countries in the world, they're much smaller than the United States, and you drive in any direction a couple hours and there's a border. So international trade is really important for most countries in the world. And as a result, as soon as the United States led the world into inflationary monetary policy, debasing the dollar, any country that didn't follow suit and debase its currency by printing more was punishing its economy by making its exports unattractive. So this currency war has turned into essentially a race to the bottom, where every country, every central bank in the world wants to print so much money that the value of their currency goes down. And now we're just kind of used to this. We're used to this, and Bitcoin comes in and has a program that won't allow anybody to expand its supply beyond a set schedule. So one way to put a number on this is the inflation rate of Bitcoin is currently right around 2%. Meanwhile, again, with the dollar, in the past year, there's been about 35% monetary inflation. So what happens is we've all become used to this world where the currency, the money's always going down in value. So you always have to be growing your assets. You have to get exposure to stocks. You have to get exposure to real estate. These assets have to go up just to really just kind of break even. And then you come along with Bitcoin, and its real case is to be a store of value where you can hold that number of Bitcoin, and you can know there's never going to be more than 21 million Bitcoin. So when you have that Bitcoin, it's like you're getting a slice of a big pie that nobody can shrink. Now, back in the old system, the legacy system, any asset that's based on the dollar, the pie is constantly shrinking your slice by getting bigger. The Bitcoin pie is never going to get bigger in its supply. The dollar pie is constantly getting bigger and making your slice relatively smaller. So it looks like Bitcoin is going up. Some of this is going up in real value. Some of this is the dollar going down. And if the dollar follows in the footsteps of all the other fiat monies that have come before it, then it's most likely end game. Now, nobody knows if this will be next year or like 20 years from now, but the most likely end game will be something that most of us have never experienced, which is hyperinflation. Hyperinflation is a spectacular economic event where the dollar goes to zero. And during that event, the real value of the assets in the world changes hands massively, and people lose fortunes and people gain fortunes. And so Bitcoin is essentially like a little ticket that to the game of hyperinflation, that if it happens, you're going to be on the receiving end of tens of trillions, hundreds of trillions of dollars wealth transfer that's global in nature. Now, if we back up and think about store of value for a second, people have been storing tens of trillions of dollars of value in artwork, not to hang it on a wall, but just to store it in a vault. They've been storing about $8 trillion of value in gold, not to make jewelry out of it or put it in a computer chip, just to stick it in a vault. In some portion of the 220 trillion dollar real estate market globally, some portion of that is wealthy people just buying an apartment for a couple $1 million in every major city and leaving it empty just to store the value outside of the banking system. And a lot of that value, tens of trillions of dollars, is currently in the process of migrating and finding its way into Bitcoin, where when you hold some Bitcoin, that's your ticket to be receiving value as the migration occurs. But basically, where does the value of Bitcoin come from? It's supply and demand. And this is the one asset that you have access to that cannot have its supply increased beyond its cap. This doesn't happen in real estate. This doesn't happen in gold. There's always new gold reserves being found. There's always new raw land to get developed into real estate. There's always stock splits and new IPOs. It doesn't happen in any other place where we have this extreme form of scarcity. And so what happens is, with this cap on the supply, anytime the demand increases a little bit, the value shoots up. So that's where the value of Bitcoin comes, is you can store your value in it. There's demand for storing value in it. And as the demand increases, that's what's causing the price to increase.
That is a great illustration. I think everybody understands the storing of gold, the keeping of real estate. And so thinking about it in those terms, I think, is a great visual. And you know, it's so funny, Brad brings up the tulip bubble in Holland. That's a conversation you and I have had before, and it was actually featured in a movie not long ago about a con man who used that to scam somebody. It's kind of interesting. Here's a very simple question. Do you think everybody should own Bitcoin? What's your thoughts on that?
Yeah, as advisors, we're not supposed to say everybody should own anything, but everybody should look into Bitcoin. But there's a certain amount of education that you do want to have, because if you don't understand it, then you'll have what we call in the Bitcoin community weak hands, where you'll get some Bitcoin in your hands, and then as soon as you experience a little bit of volatility, I mean, the volatility is nothing like any other thing you've invested in. It's gonna mess with your brain. It's gonna be like the kind of things happening at a blackjack table or a craps table, where you can go on tilt, so to speak, and you can be basically losing money in a big way. if you educate yourself and then all of a sudden you put together a strategy and you're buying Bitcoin for the right reasons, you have a strategy that really jives with the real knowledge that we have here in the marketplace, then yeah, then those people should buy Bitcoin. So however many number of people do that should buy Bitcoin. So here's the reality. You're here on this webinar. You're listening to me right now. This puts you at an advantage because you're trying to get knowledge, and most people are just trying to take actions with whatever knowledge they already have, and they hang a diploma on their wall and they never learn anything again. And that's the majority of people. By being here, you're in the top 1% of people globally that are actually continuing to learn on an ongoing basis. So nobody should buy Bitcoin without learning to understand a little bit about it. And most people won't do that until it just keeps getting more and more painful to watch it go higher and higher and higher. So it's not too late. And you should understand that Bitcoin was literally designed by some genius or some form of genius, a group of geniuses. The design is literally to go to $1 million. All of the new economics that were invented by Bitcoin were to make Bitcoin go to $1 million. And it doesn't mean one unit or one share, if you want to think in stock terms, goes to 1 million. Every Bitcoin is actually 100 million shares or 100 million transactable units. So the whole setup for Bitcoin is for the smallest transactable unit to become worth just 1 penny. And at that level, Bitcoin becomes worth $1 million. Nobody knows if that will happen, but we're already most of the way there from the starting point. But obviously, from 31,000 to 1 million still leaves a lot of meat on the bone.
Yeah, and just to clarify, because I'm seeing this question a lot, and I got this question. I've been telling everybody on our team about Bitcoin, and guys, you really need to lean into this. I think half of our company is watching this right now because I feel a responsibility that I'm seeing what it's doing. I'm enjoying what it's doing, and I want to share that with people, and I want everybody to know. That's why all of you guys are here, right? You go out and educate yourselves and listen to Jeff and people like him and do your own research. I want you guys to experience some of the gains that will happen, may happen. Who knows? This whole thing could come crashing down. We all know that, eyes wide open. But here's a quick question. We say Bitcoin is 31,000. Does that mean, Jeff, that I need $31,000 to get to buy one Bitcoin?
Absolutely not. You can actually buy a smaller fraction of value in Bitcoin than you can in any other asset. Because again, you're able to buy as small as 1/100 millionth of a Bitcoin. So now pragmatically, you can put as little as literally $5 in Bitcoin or $100 in Bitcoin. So it's actually the most accessible asset in the world because it's globally traded and the minimum investment is less than a penny technically.
Yeah. The other thing was just a quick story, just to put a finer point on that. So one of our team members, we were talking about Bitcoin this morning in our sales huddle, and she said, hey, 10 years ago, or was it 5 years ago or something? She says, I gave somebody a gift on an anniversary of $20 or 20 Bitcoins. At that point, I think they were costing $10 a coin.
Yeah.
And she called the other person the other day and said, hey, by the way, that what I gave you is probably worth $20,000 now or more. And she's like, what? Where's that thing that I gave? Like she had given it on a cold storage, like in a wallet. It was just unbelievable. Did you want to pull something up? Looks like you.
Yeah, I wanted to tell you there's an even more outrageous story because in the very early days of Bitcoin, that story is essentially a more recent version of this unbelievable story from the early days of Bitcoin. The first transaction where a person used Bitcoin to buy something in the real world occurred in 2010, and it was somebody who bought pizza with Bitcoin. And they bought, I believe it was 1 or 2 pizzas for 10,000 Bitcoin. So that Bitcoin, the amount of Bitcoin that bought that is now $310 million. So
That's a lot
you
of
know,
pizza pie. Yeah.
yeah, and we're talking about in an 11-year period. So what was once, let's say 2 pizzas cost $30. So what was once $30 is now $300 million. And when we look at this chart, this long-term chart is really important because yes, there's volatility, but does it look like it's going down to zero anytime soon? When has it ever gone below? Like if you start to look at some really long-term kind of support resistance type of things, like it's not reverting to its mean. It's never reverted to its mean. Something spectacular is going on here, and the longer that we put it off to understand it, the more opportunity that we lose. And you were asking earlier about kind of prices and the pullback. One thing that's really interesting with Bitcoin is that it doesn't just that inflation rate that creates new Bitcoin. There's another layer to it. Every 4 years, the inflation rate is cut in half. It's called the halving. And when that gets cut in half, it marks the beginning of a 4-year cycle in the Bitcoin economy. And in that 4-year cycle, it usually takes about 6 to 12 months after that kind of supply shock happens before the next bull market in Bitcoin starts. And then that bull market in Bitcoin usually lasts a couple of years, and we're less than 1 year into that. So we have several previous 4-year cycles, and if this matches up to the past 4-year cycles, you know, like the Bitcoin bubble of that happened in 2017, right here on the chart. I'm not like a master chartist, but that bubble right there that resulted in a correction, that is due around here. So we're not from a Bitcoin 4-year cycle perspective, we are not near the point of the 4-year cycle that has historically been marked by a blow off the top bubble that has to correct. That would come at between $150,000 and $250,000 at the end of this year.
Yeah, like the numbers are just unbelievable. Talk a little bit about how, and this to me is like I can tell by just reading the comments, you guys are foaming at the mouth for more information. I can tell. And as a true entrepreneur marketer at heart, boy, it would be great if I had an offer for you right now, because you are just, one of you is very mad at me that I haven't asked Jeff, how do I learn more about Bitcoin right now? But don't worry, we're going to get to that. What I want to talk about is, let's step back a bit. So I think everybody's been asking questions from a consumer mindset, right? Like, how do I buy it? What is it? What does it make sense? And that's great, folks. I want to commend you. These are excellent questions. I just want to do a little pivot as we round the bases and close out today. How have you, as an advisor, leveraged crypto assets to create a strategy that is helping your clients win big?
Sure. So this is probably from a business building perspective within the realm of building AUM. The amazing story of Bitcoin is actually not even what we're talking about here. It's not even looking at a Bitcoin chart or talking about these prices. It's talking about what happens when you add Bitcoin to a portfolio. Because while Bitcoin under a microscope, highly volatile, freaks everyone out. If you don't really know all the tricks to clarify what you're looking at, then you're going to get scared off by it. But and your clients will too. But when you start looking at, okay, here's a portfolio, what happens when we add 1% Bitcoin, or 2, or 5, or 10, or whatever? When you start experimenting there, things get very interesting, because from the holistic portfolio perspective, in most multi-year periods, adding Bitcoin actually brings the volatility of the overall portfolio down because it's a truly uncorrelated asset. No matter what the Federal Reserve does, no matter what the government does, this software that's literally run by tens of thousands of volunteers and on every continent and every country all around the world, it's a new technology that can't be turned off. Just like the internet can't be turned off. It's decentralized. So it borrowed from the idea of the internet, which was designed to make it so that the Army had a communications network that would keep going even if the Pentagon was nuclear blasted. Internet has been up ever since. Bitcoin started in 2009. Bitcoin network has been up ever since. Last year, the FBI servers went down from some hackers. The White House went down. The Treasury was hacked. Google was hacked. Bitcoin had 100% uptime. It's had 100% uptime for the whole time. So something very special is going on here. And that means that Bitcoin is uncorrelated, because where Bitcoin can kick down the doors of a company traded in the stock market and shut it down, where the government can kick down the doors and shut a company down, there's no door to kick down that can shut Bitcoin down. So it's basically the most uncorrelated asset fundamentally. Now, it might have periods of price action correlation that are temporary, but fundamentally it's super uncorrelated. And there's not a lot of assets that you can add to a portfolio that are super uncorrelated. Because when the Fed just starts printing money and putting it everywhere and aiming their money cannon, it affects everything. And but Bitcoin it's a completely independent monetary network. That lack of correlation means that it can actually reduce the volatility, reduce the risk metrics of a portfolio. And then if you want to know, okay, there's always risk and there's reward, I think the best story that you can tell to sell adding Bitcoin to a portfolio is the Sortino ratio. So we all know about Sharpe ratio. That's measuring the volatility up and down. The Sortino ratio differentiates between, okay, well, upward volatility is profit, so we like that. Downward volatility is loss, so we don't like that. So we're looking at downside volatility as risk with Sortino, and then upside volatility as return. And then we're saying, well, how much risk do I have to take for every percentage point of return? And with Bitcoin over multi-year periods, there's less risk that you have to take in terms of downside volatility. Even though there's a lot of downside volatility, there's just so much return that the Sortino ratio is unbelievable, like nothing we've ever seen before. But then you add it to a portfolio, and without causing so much volatility in the portfolio, just a little exposure into the portfolio increases the Sortino ratio. So you're able to show your client with empirical data, we're taking less risk for every percentage point of return that we get in the portfolio by adding Bitcoin to our models. So I think that from a storytelling perspective is the big story.